And coming up next, we're going to keep on talking about all of the questions that you may have about the Digiverse. Investing in the Digiverse, and how can we make sure that these investments are going into the right way? But also remember that Animoca brands are very, very kind to be giving away 1,000 NFTs and airdrops. You just have to go into the inverse and complete a few tasks. We have other seats here at the front. Don't be afraid, please come on. We'll be happy to have you here. Don't stay at the back. We also have our beautiful backdrop where you can go and sign your name so we can have it for the history of this Game On 2022. As I said, investment strategies and concerns in the Digiverse. And to conduct the conversation, we want to welcome on stage our moderator, Mei Wang, investor, Alternative Assets, together with Benedict Nolens, head of BIS Innovation Hub Hong Kong Center, Bank of International Settlements, and Alessio Qualghini, CEO, Hex Trust. Please welcome them on stage.
Morning, everyone. I think we have quite an intimate group here, and I would like to just set the pace a little bit to get us going. I will set the stage and give you a little bit of background, but I think that on the stage, even though we're talking about the bold new world, we have about, I would say, 75 years of man or women years in business experience. And I know that doesn't compute given now that we have the rapid speed of the computer. And so in computer years, I mean, I can hardly say that we would compete. But what we'd like to do is to give you a little bit of an overview on what's going on in the investment sector right now, so that as you enter into the bold new world of the metaverse, you can look at digital assets and consider what's going on in the reality of this world. So I'll just quickly give you a tiny bit of my background, and would like to move into Benedict and Alessio's backgrounds. We have two very august speakers here, and together we have banking, regulatory, legal, engineering, strategy, corporate development, and we, I think, all have some degree of fluency in the digital world, and definitely in the world that we're talking about as we're entering into the metaverse. So I have actually been calling it a Digiverse because I think that we cannot, this is not a metaphysical discussion. We have to exist in this world, and there are some realities here that I think that we can look at. So my background is in banking. I've done strategy work, both in terms of strategic planning and also in breakthrough strategy as a strategy consultant. I've done corporate work. I came to Asia to set up joint ventures and tech transfers in the very early days of China. And with that, I'm going to ask Benedict to introduce a little bit about herself. And she is steeped. Oh, can you hear? No. No. Oh, here.
So yeah, now it works. Hello everyone. So I'm Benedict Nolens, and I'm currently the head of the Hong Kong Center of the BIS Innovation Hub. The BIS is the Bank for International Settlements, and it's actually an association, our membership-based group of the world's leading central banks. So the People's Bank of China, the HKMA, the Fed, the Bank of England, all these central banks gather in the context of the BIS. So obviously with the onset of crypto money, so crypto assets, central banks needed to think about what does that mean for central bank money, and we can come back to this later, but you know there's a lot of discussions around central bank digital currency, which resulted from the onset of cryptocurrencies. In some, as you know, central banks issue money, and the money is there backed by the trust of the country and the central bank, which obviously requires a country you can trust and a central bank you can trust, which is not the case for every country, let's face it. In some central banks want to look at how the digital world is evolving, to see how they need to evolve to meet the same digital needs in the Digiverse, as you say. So my career before that, I was about 15 years in banks, then I was 6 years at the Securities and Futures Commission here in Hong Kong, which was really the time of the onset of fintech. So that's when we met with the FSTB, the Fintech Steering Group, and we tried to advocate for more focus in Hong Kong on fintech strategy. And it was also the beginning of the first fintech week then that we launched. And after that, I went to Circle, which is the issuer of US dollar coin, and also to Standard Chartered Ventures, which, amongst others, has a venture in digital assets custody, like yours, Alessia. And now I'm with the BIS, as said, completely looking at this through a central banking lens. So that's my background. And I've been 25 years in Hong Kong.
And Alessio? And did I mention there's engineering background too?
Yes, so my background, I'm an engineer by background, but I haven't really been an engineer for a very long time in my professional career. So early in my career, I basically worked in financial markets, and actually at the beginning of my career, I used to work for the securities regulator in Europe, in Italy, before moving to Hong Kong, where I worked for different banks. At the end of 2017, I co-founded Hex Trust. As Benedict was mentioning, Hex Trust is one of the global leading digital asset custodians. We focus mainly on Asia and Europe for the time being, and our business is primarily institutional, meaning that we help companies like exchanges or metaverse companies, for example, to safeguard their assets. And I think later probably we can talk more about the details of what this actually means. In terms of, I'm also the co-founder of other companies. I'm the co-founder of Clearpool Finance, which is a decentralized marketplace for lending and borrowing. So one of those applications that allows basically lenders to lend to institutional borrowers in a decentralized manner. Prior to Hex Trust, I'm the co-founder of Repo Capital, an early stage investment company originally based in Hong Kong. And the latest venture that we just kicked off is actually a joint venture with Animoca Brands that is called Griffin, and that aims at bringing, let's say, custody to the retail world. So when we talk about gamers and the metaverse, one thing that people tend to forget is that we have the same problems that we have in the institutional market. So how do I make sure that once I acquire the assets, I will not lose them? And if the assets are kind of stored and centralized in a big marketplace or on exchanges, etc., how do we make sure that users that interact with those platforms do it in a safe manner? And I think that's it for my background.
So we'll quickly move into the rules of engagement, so to say, and how it ties in with our world here. So I would venture to say that what's been happening in this world, the virtual world, has been less revolutionary and more evolutionary. And I say this because if you look at it in terms since Satoshi had come out with the white paper, it has been quite many years of consolidation that has moved to this now. And I would also say that if you look at the recent activities in terms of what's been going on with the volatility of crypto, when Powell made the announcement of interest rates, the market went down by 1,000 points, and that was about 3% of the global market, or the market. And Bitcoin at the same time went down by 9%. and ETH went down by something like 8%. Now, I find it enormously ironic, given that this is supposed to be disengaged and that we're entering into a world of decentralization, that there are alternative banks, alternative financing options, alternatives, ways that we can trade, and you don't have to go into these deep regulatory banking systems in order to I guess, relate to each other on a commercial basis and to, for example, buy things in the ether world or the meta world. But I think that increasingly this is going to continue, and I think both. Well, I don't think. I know that. Alessio and Benedict can both speak to this to some great extent, and I think that these are areas, if you're investing in the Digiverse, to really pay attention to, because it's very much tied in, and we've all seen many cycles of this. But what we haven't seen in the market is what is called the black swan events. This is a common term that has been used, but I'm not sure that it's ever really used in the context of trading crypto. But I think that we just had a major black swan event, which is the pandemic, and nobody expected this to happen. If you were an analyst to any of the major banks or an economist, and you started talking about the risk of this, I mean, yes, people, Bill Gates famously mentioned this many years ago, but I think many people would discount that as an extreme risk. But it happened, and I'm not sure that we've seen the tsunami since. I think that it's reverberating, it's going to come up. There's been some corrections, that's been boistered, I would say, by revenge travel. Everybody's traveling, so people think, oh, the travel industry is back, right? Or people are thinking, well, in 2020, people are so shocked that the market has sustained itself, even as major world powers were taking on trillions of dollars in debt, and that has to come in from somewhere. And so I think that these corrections will happen, and it will be tied to what's happening in the Digiverse, so to say. But I think that, I don't want to be a downer, because I do think that there's enormous innovation that's coming up, and that's also been powered by computing power, in terms of what's going on in the cloud, in terms of technologies, and these things are all facilitated, since the dot-com bubble. These inventions are now being put to play, and this would only increase with speed. And we know, for example, with ETH, which is Ethereum, which is about to merge, you can really see just how this is being demonstrated, because you're essentially talking about moving from proof of work to proof of stake, and that increases, for example, it would be 15 to 20 transactions a second to 100,000 transactions per second. And I think this is also part of the evolution in terms of what's going on in technology, in terms of consensus, in terms of what can happen on a global basis, and this, I think, will only accelerate. But again, I think it's very much tied to what's going on. The dynamic innovation is very tied together with what's going on in the real world. And we're going to highlight some of those things, because I do actually think, having invested in the technology sector for some decades and seeing cycles, I do think there are enormous opportunities that you might not have considered, but more with traditional investors that might have seen. So I think with that, what I'd like to do is to ask Benedict to talk more about the value of digital assets, the structure and the evolution. And she can definitely give us some background into how it ties in with real assets in the world. We talked about stable coins, we talked about these necessary areas, and then Alessio can go back to then talk about custodianship, which I think is very key, because you don't want to lose that.
Yeah, so I think to a certain extent, maybe to put it very simply, sometimes the Digiverse needs to come back to Earth, right? And so there are some very fundamental principles in how people value things. So typically how people evaluate things is tangible, right? And that doesn't mean that untangible things can't be valuable. Untangible things can be valuable, but not if they can be printed unlimited. They can be valuable if they have a rarity aspect. So just think about it very simply. I think to just think about what you need to invest in, even in this digital world, is just think about the property purchase. Are you going to buy a property in a market that is highly volatile? And I think you will say, no, I'm not going to buy a property in a jurisdiction where it's highly volatile. Are you going to buy a property, if you could choose and you had unlimited money, do you buy a property in first line by the sea? Or do you buy a property in the middle of, you know, a very busy area where you have absolutely no views? You probably take the property by the sea because you're going for a rarity value. So I think it's very important that one realizes that while there can be speculation cycles where demand by far exceeds supply, or demand blows up the price of things and creates bubbles by sheer herd effect, which was what was happening in the digital asset world, these type of things tend not to last because they're not backed by fundamentals. So ultimately, you need to find some fundamentals somewhere. And for corporate stocks, if you look at corporate stocks, there are well-established models as to how you discount cash flows, right? That's how a stock earns its value. So I think one of the big issues that has been around in the crypto sector from the time I started looking at it, and in fact I wrote the first report on this to the FSTB, I think back in 2014. But one of the issues is that there isn't a widely accepted valuation method. So that means that you are actually each of you bought, and that includes me, you're actually just acting like a sheep in all respect, right? You're just all going by the herd effect. Everybody's going in, you're going in. And that's great, just get out when the rest gets out then, right? So then follow the herd effect the other way around. My own impression is that in this cycle of in and out, which was the last 12 months, where these assets have fallen 70% or more, Bitcoin has fallen 70%, but you know, some of the DeFi tokens have fallen a lot more, and some tokens are now widely known to be frauds, right? There are thousands of tokens. So in fact, the large majority is now ending up being frauds. So in this cycle, frankly, if we are very objective and very honest, the people who made most money are the intermediaries, right? And Alessio can come back to that later. In some, even though we're talking about the decentralized world, it's really the people who provide some kind of an intermediary service that have been able to capture most of the upside. And that includes the trading platforms, because they on the side can do the trading. And when you do trading, you can capture value as these herds come in and out. And these herds are not as smart as your algorithm is. You see what I'm saying? So anyway, that's just to say it's important to just always focus on value. And I think, therefore, that value in this sector is still not established by far, right? So we don't know what the value of Bitcoin is. The value of Bitcoin should be if adopted widely, but it's not being adopted widely as a payment instrument at this stage. And you know, you can look right now in the last 24 hours, there is an article about the El Salvador experiment. And you know, they made Bitcoin the legal tender in their jurisdiction. But so they actually gave an incentive, which was that if you download the wallet, you get $30. And it proves that a lot of people downloaded the wallet, but only 20% of who took that $30 have used that wallet since. And with the volatility, of course, they're not using it now as a payment instrument. And a lot of these people are actually very poor people. So if they had been accepting it for goods and services, then as said, hopefully they were out the moment that the drop started. Otherwise, these people's livelihoods really is down by 70%, right? So I think, again, we don't know what the value of Bitcoin is, and the value of Bitcoin would only be based on not just the rarity, but whether the rarity has a value, which has to be adoption, right? And we're not seeing that so far. So then is the question on ETH, and I think probably ETH has a lot more potential for adoption, right? Including with the merge that is going on, with everything that is built on it, with all the decentralization that it drives, which are all good intentions. Let's face it, it's about creating a new world of sorts, right? So there's nothing wrong with trying to do that. That's actually all very good. The question is, what does that mean to the value of ETH, right? And so far, I still don't think we have a model either for how you value Ether, right? So there may be more activity on that network, you could say, and much more services built on it. And therefore, there should be, over time, methods of valuation that we will discover. But as of today, I haven't discovered it. So it's still more of a bet if you hold it. Let's put it like that. So just keep this in mind. There's nothing wrong with buying something speculatively, if it's 5%, 10% of your assets. Even if you think it can fall to zero, that's only 10% of your assets gone. So in fact, from a diversification point of view, that's even a smart thing to do, I would say. But if you're investing, more than 50% in something you don't know how to value and you don't know the tie to the real world, then I would be slightly more cautious. And the same goes in general for the metaverse. So I don't know, I haven't bought NFTs, and maybe I should have bought an ape in the beginning and pawned it away to someone else while it was very high. But look, there must be some things there that are unique, that are rare. The same thing going for this virtual land you can buy. There must be virtual land that will acquire value. Maybe this land associated with services that big corporates can offer, right? So we were looking, for example, at the numbers, but it's quite staggering how much some of the biggest brands are already making from this metaverse in terms of selling NFTs and related products. And I haven't looked into it in detail, but there's certainly opportunities there for brands. Whether as an individual you can make money out of it, I don't know. I know they're trying to say the land here in the middle of New York is more scarce than the land, let's say, in Timbuktu. I understand that, but if no one is going to use the land in New York in the metaverse, then it's not valuable. It's only valuable if everybody else is using that piece of land in the metaverse. And maybe I said, maybe the brands like Adidas, Nike, and etc., maybe they can use that land, right? But I'm not an expert, so I can't opine on it. But I'm sure there's ways that you just always try to go back to the base principle. Either is it backed by an asset, or is it something rare, or something where you have an existing model you can value it with. And if not, it's speculation. And speculation, again, is fine, but just don't lose your shirt over it.
Yeah. So I think it is a matter of tying it back to an asset. So for example, I mean, just with the third quarter rush, and not only that, but the rest of the world has gone back to some kind of a post-pandemic freedom. So there have been a lot of briefings. So I was with a bunch of fixed income traders, and they will really be driving the markets, right? So essentially, in the phase one of what's been developing, is all the major banks now have a digital strategy, and not only that, but they have figured out how to coordinate their exchanges, the values, in terms of all the back end. And in fact, what they're looking at is that the back end will likely go away as a lot of things are being streamlined. But all of them are tying it back to the physical assets. Even all the venture investors that I've been talking to, they're basically, all the companies or the private equity guys, they're looking at really, how do companies survive in this coming set of volatility? It will be volatile. And the volatility is not just from world politics, but in terms of development. So it's domestic politics and international global politics, which, as you know, will affect, even the electronic devices you have, what's going on in the semiconductor industry. And furthermore, with what's going on with climate change, for example, this morning I woke up to the California grid is in trouble just because it's been record heat in the last dozen days or so. And without power, how are you going to trade your digital assets? Right? So, I mean, these things are all tying back. So I'm mentioning these things because it will I want to lead into Alessio to talk about the custodianship of the assets. In our pre-call, we were talking a little bit about NFTs and how, for example, with NFTs, with the major artists, you probably all heard that first auction that went off at Christie's for $69 million, which was such a boom that kind of drove the market. But the artists are basically saying, okay, well, you can either keep the NFT, the digital version, or you can keep the physical version. Which would you keep? Right? So anyway, with that, I want to lead into what's very important, which is custodianship.
All right. So custody is one of those activities that Benedict was mentioning at the level of intermediary, right? So we provide more or less of a financial service to institutions, and we charge a fee for that. But why can we charge a fee? It means that we need to add value to the overall ecosystem. Now, in the digital asset ecosystem, there is one thing that is very important. No matter what you're looking at, whether you're looking at Bitcoin, you're looking at a DeFi application, you're looking at NFTs or some kind of land in the sandbox, all these things, they all share the same underlying technology, which is the blockchain, right? And all these assets, I would say they have two main characteristics that make custody very important. The first one is that they are bearer assets, which means that since there is no central depository, if you lose it, if you transfer it to somebody that you didn't want to transfer it to, it's very hard to get it back. Transactions cannot be unwound. And the second one is that these assets are digital, which basically brings to the fact that they can be transferred even faster without much without borders, right? And they can also be programmable. Now, custody was a very hot topic, I would say 4 or 5 years ago when Hextrust was born, because we were seeing institutions coming to the digital asset world, and there was no way that institutions will come in without a proper custody infrastructure. In the last 3-4 years, what I would say is that most of the companies involved in custody, they have tackled a very important problem of custody, which is the safeguarding of the assets. So we build infrastructure. We've been for hot wallets, for cold wallets, for warm wallets. We've been audited by PwC, by Deloitte. I'm talking about Hextrust like any other custodian companies out there. And I would say that after these 4 or 5 years of iterations, trial and error and everything, I would say that the safeguarding piece of custody has been sorted out. There are a number of leaders in the market, and they have slightly different methodologies of doing things, but we can fairly say that we have a standard process for holding digital assets and to make sure that we can transmit a certain level of security to our clients. Now, I don't want to get into how we do it, but I think what's more important is now that the safeguarding piece has been sorted out, there's another very important piece that we need to tackle. So these assets are not just assets. They're not just like US dollars that are entries in somebody's ledger. They're not just HSBC shares that are kind of entries in your bank's ledger or in the central depository. They are kind of living animals because they're digital and they are programmable. So which means that they have a value because they can interact and they can evolve. when you have a piece of land, you don't just have that piece of land in your wallet, but you want to make sure that that piece of land can be transferred, that piece of land can be lent to somebody else, that it can be used by a virtual real estate developer to build on top of that, and that somebody can actually then use it to play a game in that kind of ecosystem. So the next point to really make sure that is addressed by custodian companies is how to make these assets safely usable. And this is important because if you think about how most of the custody nowadays is done via exchanges. So exchanges like FTX or Binance, they hold, I would say, most of the crypto assets in the world. But to just give you a short example, all these assets in exchanges, they're kept in omnibus wallets. So they're basically all put together in one big wallet, which makes it very easy for them to make it available for trading, etc. But guess what? It makes it very hard for them to make them available to being used in a blockchain or in the metaverse. So what HexTrust is trying to do, together with other custodian companies, is actually to create those kind of functionalities, those processes, and make sure that our clients cannot just keep the assets safe, but they will be able to use them and to build a real economy on top of that, which in this case is one of the first use cases for the blockchain, which is the metaverse. I'll stop here because I see that we don't have much time.
Well, we actually had a little bit of a dialogue that we developed, the three of us, but we won't have time for that. And I'm sorry to say we may not have time for questions and answers, but I would like, I hope that we can continue with this at some time. But I actually want to now enter into some of the investable assets. So I'm going to put you on the spot, Alessio, and maybe quickly run through. You give a very quick description on what are investable assets right now, and then I will add a little bit to that, as will Benedict, in terms of what else besides the Digiverse that we can be looking forward to.
All right. So really, in a nutshell, if we're talking about the metaverse and the metaverse is based on two technologies, really, in a nutshell. One is internet, and the other one is the blockchain. Internet, I don't think we want to get into the investment theories of internet, etc. But the blockchain is important, and I think it's very important to highlight that there is no metaverse in the shape and form that we are talking about today without blockchain. A metaverse without a blockchain is something that's been existing for a very long time, but probably has I wouldn't say less value, but a different value than the one that we're discussing today. So let's talk about the investment in blockchain. Everybody's talking about the NFTs, buying the ape or buying weapons. That is just a small piece of what you can actually invest in. Right? So if we talk about how we were looking at investments in the internet, there were different layers, right? So there was the hardware that we could buy, there was the software of those companies that were designing the internet or they were hosting the internet, and then there were the applications, and then there were the businesses that were built on top of the internet. But the blockchain is the same thing. If we start really from the tip of the iceberg, investors can invest in the source or the shields or the land or all of these assets that are native within the metaverse. But there are also other options in the metaverse. So usually every single platform has a native token, which is the token that is used for payments or for the governance features of the same platform. Right? For example, Sand for Sandbox. And this is if we're talking about the application, the business. Then if we go one layer down, every single metaverse is built on top of the blockchain, right? So you have to look at the layer 1, layer 2. So which ones are the layer 1s and layer 2s that are successfully hosting blockchain applications such as Metaverse or Sandbox or whatever? So we're looking at Ethereum, we're looking at Solana, etc. And then you have other types of applications built on top of them. There are the aggregators, or some kind of other applications that make the assets available, for example, marketplaces, etc. This is for the blockchain. Now, if we go one layer down, you don't really have to invest directly in the blockchain digital assets, but you can look at the companies that are helping to build it. So you have the intermediaries that Benedict was mentioning, so the exchanges, you have the custodians, you have all the companies that operate at the infrastructure level. If you go one layer down, you also have those companies that enable the infrastructure companies to operate. For example, all those companies that operate nodes, right, or that become staking providers for companies like us, that we cannot build everything by ourselves. So what I want to say is that when we look at the investable assets, there are some digital assets, but there are also kind of equity investments that we can look at. And all of these investments have very different characteristics, and they need to be understood.
Yes, so I think that we are running out of time, but I think what I'd like to do is just to say that with Web3, I would encourage you not only to look at, what I think all of us here are interested in a digital world, and you will be investing in what Yat so enthusiastically spoke about. I mean, he is the master of the metaverse. I mean, he has been doing this for a very long time, and I have enormous regard for Yat. But I would also encourage you to look at the protocols. So, for example, during the .com era, there are, this is pre-Facebook, pre-Google, and these are the people that invested in some of the early companies have lost out, but the people that invested in the protocol or the standards and have in that basket made money. So if you look at what's going on in the Web3, there are a lot of supporting areas that you can be looking at in the real world, and it's being traded and the assets are protected by all the regulatory agencies, in terms of true assets that you hold. So I would encourage you to look at that broader context. And because we're out of time, I'm going to leave you all with one question, which would have been more interesting had we had a discussion that would have included some interaction from all of you. But I want to ask Benedict and Alessio, and for you to think about, do we live in a simulation? Yes.
I don't know. I don't know. Why would you say yes? Yes. No, I think sometimes it's more, do we live in a schizophrenic world where on the one hand we live in the real world and on the other hand we live in the Digiverse. So yeah, to me it feels more schizophrenic than simulate. But I think the points you all made are very important, and there's plenty of investment opportunities, as you said, and what this whole industry or budding industry has made possible is actually early investment by retail investors. Whereas before, as a venture capital investor, you needed to be quite advanced or backed by other capital or very rich. It has democratized investment. So yes. That remains an opportunity. And as you said, there are tokens of certain of these intermediaries, right, that you could buy. Yep.
Just look at the real world here. We do exist. I mean, sad to say, on the metaphysical front, we still talk about our five senses, and that came from Aristotle. We have at least 27 senses that they know. And the physicists and the mathematicians are proving that there are 11 dimensions. And so if you can imagine, if you went from 2D to 3D, just how many variables there are, I can't, for myself, can't even imagine what 11 dimensions would mean. But I would encourage all of you to look at what's going on in the world and, the volatility that's been caused by what we do here in this dimension. And as you are investing into that bold new Digiverse. So with that, thank you very much. And I would love it if Bowie can organize another opportunity for us to really have some interactive time together.